Today, we're diving deep into a comprehensive trade thesis on the UK homebuilder Bellway, ticker BWY. We're going to apply the Wyckoff methodology to decode what looks like a classic institutional accumulation pattern, one that could be setting the stage for a very significant markup.
All right, let's get right to the point. Here's the entire thesis in a nutshell. The core argument is that Bellway has just wrapped up a massive 18-month accumulation phase. We believe the smart money has finished absorbing supply, which was signaled by a textbook spring event on February 9th. Our analysis shows the stock is now entering phase D, which is the markup phase, with a price objective somewhere in that 3,500 to 3,800 pence range.
So, to really understand why this setup is so compelling, we need to quickly touch on the theoretical foundation. This entire analysis really hinges on one of the core laws of Wyckoff's methodology.
And that is the law of cause and effect. The principle is actually pretty simple. The longer and more significant the period of accumulation, what he called the cause, the more powerful the subsequent trend or the effect. So the most important takeaway here is that Bellway's 18-month sideways grind isn't stagnation, it's preparation. It's the market building up a huge amount of potential energy.
Okay, so with that framework in place, let's deconstruct the price action on the chart and see exactly how this cause was built piece by piece.
What we're looking at here is more than 18 months of lateral, sideways movement, all contained within this very well-defined range. You can see the clear structural support down around 2,134p and a very stubborn resistance level capping the upside at 2,998p. This long consolidation period represents a massive transfer of ownership from impatient retail traders, the so-called weak hands, into the portfolios of long-term institutional players, the strong hands, who are just patiently absorbing every share they can.
Now, the pivotal moment happened on February 9th. This right here is the spring, a classic terminal shakeout. You see the price dip down to 2,492p, running all the stops below the range and shaking out the last of those weak holders. But the key isn't the dip, it's the immediate and powerful V-shaped recovery that followed. That signals total supply exhaustion. The trap was set, and frankly, the bears walked right into it.
And this is just a brilliant illustration of another Wyckoff law: effort versus result. Right after that spring, look at the massive volume spike, 1.11 million shares changing hands on February 11th. That effort produced a pretty significant result, a 4.15% jump in price. This is the institutional demand we're looking for. And just as important, look at the subsequent pullbacks. They've all happened on very low volume, less than 350,000 shares, which tells us there's just no selling pressure left. The supply has been absorbed. So the next logical question is, who exactly is behind all this accumulation? Who are these strong hands that have been patiently buying shares for the last year and a half? Well, this is where you have to separate the signal from the noise. On the surface, the number of institutional funds holding the stock actually dropped 18% late last year. That's the noise. The real signal is on the right. Look at the quality of the institutions stepping in. We're talking about the giants. JP Morgan boosted its stake by almost 90%. BNY Mellon by nearly 98%, all while heavyweights like BlackRock and Vanguard maintain their huge positions. This is the very definition of a transfer to strong hands.
But you know, it's not just the big institutions that are signaling their conviction. The company's own management is sending what is arguably the ultimate insider signal with a major capital allocation program.
Bellway has kicked off a $150 million share buyback program. So far, they've already spent $48 million of that, buying and canceling about 22,000 shares every single day. Now think about what this does from a technical perspective. It actively tightens the available float, it reduces the supply on the open market, and it basically creates a springboard for future price appreciation. Okay, so the technical picture is pretty compelling, but a solid chart setup always needs a solid fundamental story to back it up. So let's see how the underlying business reality supports this bullish picture. And the story here is really one of strength and resilience. In the first half of 2026, Bellway posted revenue of £1.51 billion, which is up 6% year over year. They're increasing their home completions, and they have a very clear strategic target to deliver 10,000 homes a year. The key here is that in a pretty challenging market, this company is actually growing its volume while a lot of its competitors are pulling back. And when you look forward, the path of least resistance really seems to be pointing up. You've got this convergence of tailwinds. At the macro level, Bank of England rate cuts are widely anticipated. You've got policy support from planning reforms, and internally, they have a massive inventory with a strategic land bank of over 95,000 plots. It all points to an expected recovery in the reservation rates.
Now this is really interesting. Compared to peers like Barrett, Bellway shows clear relative strength with much higher net margins and return on equity. But here's the critical Wyckoff insight. BWY has actually lagged its peers year to date. And in the Wyckoff world, this last-to-move characteristic can be a very bullish sign. It often signals that more potential energy has been stored up, which can lead to a much more powerful markup phase.
So, we've established the technical and fundamental cause. It's solid. Now we can use Wyckoff's principles to project the potential effect on the share price. Where could this actually go?
The methodology for this is a point-and-figure horizontal count. Essentially, by measuring the width of the entire accumulation base, we can project a price objective. When we run that calculation, it gives us a primary markup target in the range of 3,250 to 3,400 pence. And if things get really bullish, there's a more optimistic extended target pointing up towards 3,820 pence, which would put it right back near its all-time highs.
Look, a great thesis is one thing, but it's useless without an actionable plan. So let's wrap this up with a clear strategy for how you could enter a trade like this, and, just as importantly, how you'd manage the risk. There are really two primary ways you could approach an entry here. Entry A is the pullback entry, what Wyckoff called the last point of support, or LPS. That involves buying a low-volume retracement back into that 2,750 to 2,800 pence zone. Entry B is your classic breakout, or the backup to the edge of the creek. This means you wait for a sustained close above that key resistance at 2,998p, and ideally you want to see that on high volume, over 1 million shares. And here's how you manage the risk. The structural stop for this entire thesis, the point where the idea is completely broken, is a close below 2,490p, which is the low of the spring. If you need a tighter stop, a swing stop could be placed just below 2,700p. Now the whole thesis gets invalidated by one of two things: a technical failure called an upthrust, where price breaks 3,000p but then fails and crashes back down on high volume, or a macro failure, like an unexpected hike in mortgage rates. So to wrap it all up, Bellway is presenting a pretty rare confluence of bullish factors. You have a validated Wyckoff technical structure, you have clear sponsorship from both major institutions and the company's own buybacks, and you have a solid fundamental value story that's driven by growth and a recovering sector. The key level to watch right now is that 3,000p mark for final confirmation. It certainly appears that the 18-month cause is finally ready to translate into the effect. Which leaves us with the final question. With such a well-defined cause, established over 1.5 years of trading, is the subsequent markup, the effect, now simply a matter of time?